So today, a really important one.
Yeah.
Shopping around for a better mortgage. And joining us right now is Jason Cuerel from Mortgage Innovations.
Jace, how often should we try and hunt for a better mortgage?
Look, I think if you're looking at your mortgage maybe every 6 to 12 months to find out what is available out in the mortgage market, it's definitely going to be worthwhile, especially in the moment with this rising interest rate environment. So we need to keep the banks honest, and it's definitely worthwhile checking to see if you can get a better rate.
We hear this all the time. Go and talk to your mortgage broker. Get a better rate. It's so confusing, though. Can you please break it down when you get faced with variable interest rates, fixed interest rates, these providers, that provider, and all of the little conditions that come through, and the mortgage cliff that could come later if you fix it. How do you go about negotiating this, knowing that there's a lot of baffle out there?
Yes. Okay. So to simplify the process, so there's a couple of things people can do to look to save money off the home loan. Number one, have a chat with your existing bank and say, look, I'm looking to potentially refinance to another bank if you're not going to get me a better interest rate. So that's one process people can easily do, is call up the bank and say, look, I'm looking to refinance. I would prefer to stay with you. What can you do to keep my business?
What about, though, the hidden charges in all that?
Yes. So if it happens that the existing bank aren't going to do a better interest rate, or they're going to give them a little bit of a discount, so what we can do is there's several lenders out there right now offering cash back of $3,000 to $4,000 to switch banks. So there's a process involved in that where we've obviously got to check their income, their ability to service the home loan. But if they meet all those requirements, we can look to switch them to a new lender, hopefully get them a better interest rate so they can save some money, potentially reset their loan over a fresh 30-year period, which might in itself just reduce the repayment as well. The switchover costs from going from one bank to another costs about $1,000. So if the new incoming bank is going to offer them $3,000 to $4,000 to come over, that's actually going to give them $2,000 to $3,000 in their bank account, plus a better interest rate.
For people right now who are listening that just think the prospect of them ever owning a home is just impossible, would you say still come and see you, a mortgage broker, to help make that plan to get there?
Absolutely. So there's a lot of people that come to see us that aren't necessarily in the market to get a property straight away. They don't know how much savings they need to have. Obviously, they don't know how much they can borrow. So we have a lot of initial consultations with clients to give them a bit of a plan as to how much money they need to save to be able to get into the property market.
It's Money Week with Flan, Ali and Spider on the Gold Coast Triple M, and Jason from Mortgage Innovations. Thank you so much for your time. Some really great helpful tips there for everybody here on the Gold Coast.
Happy to contribibute, and anytime you'd like us to assist, we're here to help out.
See you, mate.
Too.
I understood all of that. You must be a weird mortgage broker. Because, mate, we talk to not just people who own homes, but lots of people who would love to and can't. So tough.
Oh, it is. And look, it's frustrating at the moment because interest rates are up quite high at the moment. People's borrowing capacity isn't as high as what it was 6-12 months ago.
Okay.
Mm-hmm.
That's part of the issue at the moment is borrowing capacity. But look, we're hoping within the next 6 to 12 months, interest rates will hopefully start to crescendo down once inflation gets under control.
Thank you, Jace.
No dramas, guys. Have a good day.
Jason from Mortgage Innovations helping out with how to shop around for a better mortgage tomorrow.